big takeaway for me, it is early. I mean, the conversations were great, but the discussions really centered around ETFs, regulation, obviously.
The whole issue with crypto right now, for us, is just regulatory.
Yeah.
There's no question. Everybody wants it. Everybody is fascinated by everything from blockchain to digital assets to trading crypto to the technology. Everything. It's all cool. We all agree. The hardest part is we can't figure out how to get past the regulatory layer. You have layer 2s explained. We can't get past the regulatory layer. We can't figure out. The new rules are basically handcuffing, every single brokerage firm. We don't know what to do. Every brokerage firm is the same way. We don't know what to do. The new regulations are requiring brokerage firms to basically put up dollar for dollar.
Yes, SAB 121.
SAB 121. It's the most ridiculous thing I've ever heard. It's ridiculous.
Well, I think we'll see some changes there. I mean, even
you can't build a business putting up $1 to $1.
Exactly.
No.
That's the new regulations. They're basically saying if you don't
even have to put up $1 to $1 for stock. I mean,
no, not you. Tony Batista goes. No. Let me explain. They're saying Tony Batista goes out. You buy $1,000 worth of crypto. You fully pay for it with your own money.
Right.
Forget about leverage or anything. You fully pay for it. They want Tasty to put up $1,000.
Right. To guarantee it.
But it's already guaranteed.
I understand.
You already paid for it.
I'm telling the audience, yes.
Well, then what do you
$1,000?
What do you do? So you have a capital requirement of X. Nothing changes other than the price. Now your capital requirement has doubled, tripled,
so
right?
Let's say we have $100 million of customer assets in Bitcoin, right?
Solana, use that.
Whatever. We have
tripled.
We have $100 million of customer assets in Bitcoin. We put up $100 million to hold it, just so we could offer it on the platform. We don't make any money on it. Now it goes from 25,000 to 50,000. Now we have to put up another $100 million.
That's why I use Solana, which was an excellent example.
Same thing. It doesn't matter what the underlying is. It's the most ridiculous. Gensler's doing everything he can to get rid of crypto trading on every level.
You said it. Unfortunately, we have to wait for him to go before you're going to be able to do anything to move crypto in a positive way.
I don't know what to do. I mean, no firm knows what to do. Nobody knows what to do.
Yeah. Well, I think you've got
to know what to do. Nobody knows what to do. That's for sure.
What is there to do? What can you do? I mean, how do you do it? You want to support the customers, and we want to support what everybody wants to do.
Sure.
And what do you do?
I'm kidding, but you're right.
Yeah, well, I think you got to keep building. In the meantime, there is a light at the end of the tunnel. I mean, even yesterday there was.
I agree. You keep building. That's what we're doing. We're keeping building, but it's hard to justify the expenses of building.
Well, there was a letter sent by some people in Congress, some key senators and members of the House as well, to the banking regulator about SAB 121 yesterday. Mm-hmm. So basically saying you cannot enforce this. This is unenforceable. This is
it's ridiculous.
So we'll see what happens, but
it's
I'm encouraged.
Insane. It's pure insanity. I mean, there's a lot of politicians that want to get rid of it. I understand, but what are firms supposed to do? What is a firm like? That's why firms like Schwab. What can they do? What if they have they're going to put up billions of dollars just every time crypto moves?
Yeah,
so freaking stupid.
Well, in the meantime, price goes up. Solana has outperformed for sure, Tony.
Yeah, it has. The good thing you mentioned that because Tom had a nice sized position there. So
I didn't even realize how big.
Very nice.
Not just how big. I didn't realize how much Solana I had relative to everything else.
Okay.
I had been buying it all the way down, and I never even looked at it. So I think I bought it mostly in the low 20s.
Best thing that could have happened to you, not looking at it.
I didn't look at it. I haven't looked at it for 6 months.
Yeah.
Sold this morning in the 60s. I don't know.
Sold it all?
No, 25%.
Okay. Yeah. I mean, I've been looking at, as we've priced ETH and Bitcoin, we've looked at that spread, that's down 4%. Solana versus Bitcoin in the last month is up 111%. And you look at where that could go to if we assume we get back to some of the levels that we've traded at before, and that would imply a price, even if we just saw a little bit of a continuation in this move here, that imply a price of Solana of about $90 to $100, somewhere around there. So maybe some room to run.
It's in the 60s right now, right?
Yeah. A lot is being built on Solana. A lot of use cases, a lot of utility. I think people are waking up to that. And it just takes time for these applications to develop and then for that real value to kind of exist. And you saw that with Bitcoin. You then saw Ethereum kind of follow that. And you're seeing Solana take a similar path when we look at these larger market cap tokens. Vol hasn't changed much here for anybody that's following it. We're still trading around a 65 vol, 65% on Bitcoin and ETH. So for Bitcoin, that gives you about a $3,000 weekly expected move. On the Ethereum side, it's just under $200. So some kind of expectations there, I guess, putting probabilities or some perspective around it. But the market is still largely just being driven by the same institutional adoption, ETF narrative. BlackRock came out and officially filed a Ethereum ETF this morning.
Yeah, I don't understand I really don't get the whole obsession with these ETFs. That's not, I don't want anybody to lose focus on the problems in Bitcoin right now. That's not the issue.
Yeah.
I don't really give a crap about, it'd be nice to have the ETFs, but I don't really care. For me, the issues are so much different,
Yeah, I agree. And going back
Aren't
to
we past making an ETF, I think is what you're trying to say, right?
I don't want BlackRock to think, oh my God, we're really supporting the crypto business when they, just because they have a stupid ETF.
Right.
The real problems are these things like SAB 121 and all the different rules, for people that actually want to hold the digital assets themselves.
Yeah, absolutely. Well, on the ETF front, though, with Ethereum, I'm curious to see kind of how BlackRock positions it or how any firm would position it, because when you can stake Ethereum now, these massive institutions could have a position that kicks off this yield. Do they pass that on to the ETF holders? Does the ETF pay a dividend in that form? It'll be interesting to see that. So otherwise, it's like a treasury ETF that just is based on price appreciation or depreciation and no yield there.
Yeah.
But that's a little bit of what's going on in the market. I want to talk about layer twos today. This isn't something that we've discussed. There might be an opportunity here as we go through the slide. Are you guys familiar with layer twos?
Not really.
Okay.
I've heard of it, but I don't really understand it.
Okay.
So enlighten me, I don't know.
All right. A layer two is a blockchain scaling solution. We're going to talk about this in regards to Ethereum, but you can think of the Lightning Network on Bitcoin as a layer two. It is a way to scale a blockchain. We'll get into what's known as the blockchain trilemma in a second. But as you guys know, the transaction throughput is pretty low on some of these layer ones. So you have a base chain like Bitcoin or Ethereum. That's your security layer. That's your settlement layer. But there's high fees. At times it can become very congested, maybe 10 to 20 transactions per second, very slow, relatively speaking, compared to just the financial industry in general. And so layer twos are a solution to that. These are blockchain networks that are built on top of a layer one. So built on top of Ethereum as the base chain. Transactions execute on that chain and then settle to the layer one. It's your security layer, your settlement layer again. And so they're faster and they're cheaper than they would be on a layer one. And if we jump to the next slide, we've got a couple images from Chainlink here that compare transactions on a base blockchain versus layer two roll-ups. And without getting into, there is a lot of nuance here, and without getting into a lot of the technical details, we'll just kind of look at this high level. But when you think about what happens on Ethereum, for example, you interact with the network, you have a transaction, you pay a fee. And you can see that here, transactions on base blockchains. Roll-up transactions, layer twos in this process are going to batch the transactions together. The fees are going to be split across all of those transactions to settle on the Ethereum blockchain. So one way to think about this is probably comparable to shipping or to buying something on Amazon. If you just go in there and you buy everything individually, or you ship everything individually, you're going to pay those fees, those shipping costs for each package. If you take all the boxes and you put them into a larger box and then ship that, it's probably going to be a little bit cheaper, more efficient. And that's really what, in very simple terms, what we're seeing here with layer twos. And so we just jump to the next slide in terms of, again, how these work. Transactions are executed off-chain. That data is batched together. Gas fees are going to be shared across all the transactions in the batch, and then they're going to be validated on the layer one.
It's like an Uber ride when you put everybody in the car together.
Yeah, exactly.
It's a good way to explain it to him.
It's just a way to make this a bit more efficient. And this matters because it works to solve really a key an issue, or what's called the blockchain trilemma that we can look at on the next slide here. So when you think about, if we just jump to the next slide, when you think about a blockchain, you have a security component, you have decentralization, you have scalability. But if you want an extremely secure blockchain, you want a very decentralized blockchain, you're going to have to sacrifice scalability. An example of that would be Ethereum Layer 1, Bitcoin, very, very secure, very decentralized, but not all that scalable. Now, if we want a very scalable blockchain, we might compromise on security, certainly are going to compromise in decentralization. It's going to be much faster simply if we just have a central server versus a bunch of different nodes that are all competing to solve a math problem and validate transactions. And so this is a solution to that. It's still very, very early, but these L2s, because they're Ethereum virtual machine compatible, they can handle the same types of transactions. They do the same thing as Ethereum, but they do it at a faster and cheaper rate, but inherit the security of Ethereum when they settle on chain. You can almost think of them.
Why wouldn't anybody use these? If you could, if there was an option.
So you're starting to see that. You're really, over the last 6 months, starting to see an explosion in activity here. This is just how early it is. And if we jump to the next slide, I want to look at these as businesses or companies. They're networks, but you need to think about them as businesses that are almost selling block space or selling security in terms of your transactions here. So there's a handful of different L2s. New ones pop up all the time. A lot of the time what happens is you have one that's successful. Some people look at it, it's open source, they fork that code, and then they make improvements on top of that. So we have a few here. I'm sure people have probably heard of Polygon, Arbitrum, Optimism. Optimism and Polygon have been around for a while in terms of their tokens. Arbitrum, the token doesn't even have enough data to go back a year. So we're still in the early stages of adoption. But you can see, just comparing across these different chains, starting to see a handful of transactions. The TVL there on Arbitrum is a lot bigger. Some of these chains are, in a way, better suited for different use cases. You're seeing a lot of DeFi activity happening on Arbitrum, for example. You can see the average transaction fee. So that fee arguably is still relatively high, 29 cents, 23 cents, but it's a lot cheaper than maybe $10 on Ethereum to do certain things. And then when we look at the protocols, you can see the number of applications or protocols that have been deployed to these different chains. Arbitrum and Polygon have the most, continue to grow almost on a weekly basis, but just a little bit of a comparison there. But the thing that is important is really the next slide, and this is looking at the investment or the trading opportunity for the tokens themselves. And so if we jump to the next slide, I just want to compare these three here. And where I think there might be a trade is that you could see a little bit of catch up in some of these versus ETH. And this is just typically what you tend to see at the beginning stages and then throughout a bull market if we're in one in crypto. The blue chip, big market cap stuff catches a bid first. Bitcoin's up. We've talked about Bitcoin market dominance at 55%. It's come back down towards 50%. So still, that has been leading. But when you then look at what happens next, you see things like other layer ones, Ethereum, Solana, for example, other tokens, and then you get more into some of the layer twos and then some of the meme coins and the stuff that's a bit more speculative and just generally more volatile. But the market cap of these is large relative to the fees that are being generated by the networks. You can think of the fees in a sense as the revenue that these networks are generating. Polygon is the biggest in terms of market cap at 8 billion. The others are closer to 1 and 2 billion here. And then if we were to do it a bit of a kind of fundamental analysis, how do we think about these things? They're expensive, again, relative to the fees that they're kicking off. I would almost look at that as a PE ratio, 419 times, 200 times, 248 times. And the year-to-date return, Arbitrum has not performed as well as Polygon or Optimism, but where there might again be a trade here is in that relative performance. So if we do in fact see these things continue to move higher, I would expect, and simply just because a lot of times people come to the market and say, oh, well, this thing went up a lot and it's 3,000 or it's 2,000. This other thing is $1. I could buy a lot more of that, on a nominal basis, and I'll get into that trade. And so maybe there's a trade there, but you certainly look at that relative performance of Polygon and Arbitrum versus Ethereum, and they are down quite a bit, while Optimism has outperformed here on a relative basis. And these tokens have just been, or were, just absolutely decimated. I mean, we're talking about things that provide real value, real utility, actually generate revenue, have a cash flow as a business, and we're down 80 to 90%. And they maybe never should have been bid up to, they weren't worth what they were worth, obviously, at the time. But there could be a trade here. And I think it's just largely that this is so new and most people don't really understand what this even is. But these actually are businesses or networks that generate cash flow on chain.
Yeah.
So
they're pretty simple.
I mean, it's really just, and that's, I'm hoping just to educate people around what else is happening in crypto, not so much what you can do, but here's other things that you could, you can participate in. This is how it works in a sense.
Yeah. I never really knew what the level 2s.
Yeah. Well, it's just, my point again is that this is real. There was the same argument at times around the internet. And I've even seen some of these videos circulating now where people just couldn't believe that Burger King was going to accept credit cards. It's just funny to look at that in hindsight. And this is a real thing. What's different about this is there's an opportunity for almost a tangible investment. There's that comparison of if you could invest in.
I couldn't believe the first time I didn't have to sign for something after I used my credit card. Like, using credit card was bad enough, like years ago. Now you get used to it. You want to use credit cards for everything. And then when you were putting something on the internet, I was like, I'm not putting my credit card on the internet. Absolutely not. And then when I didn't have to sign anymore, I don't have to sign my name anymore. It was.
Now
you're right.
Just tap.
Yeah.
Now you just tap. Yeah, tap it.
And so, in a way, what we're seeing happening in terms of investing in networks or protocols, it's almost similar to if you could invest in the email protocol. Mm-hmm. If there was an email token, arguably that would be worth a lot relative to the value that it's created, and that's kind of what you're seeing here early stage with blockchain technology. So that's just a couple ideas. Maybe we see Polygon, Arbitrum play catch up. It's the same thing that you're kind of seeing with Solana now. Solana over the last year just got absolutely hammered, and now we're seeing a big run up in it relative to Bitcoin, relative to ETH. But it was a very poor performer until people kind of looked at, all right, where else can we see some capital flow? Yeah,
no, that's interesting. It's good. I didn't really know much about Arbitrum and Optimism, but
Yeah, I think from one more point, if you're trying to, how do I think about this, or how do I measure the growth in this? I would look at simply the fees that are being charged. It ultimately comes down to, are more applications being built on these networks? Are more users coming to these networks? Are they being utilized for the purposes, for the reasons that they exist? And if we continue to see that growth, then that would be one signal to me that this is an area I want to be in.
We've got to make this stuff mainstream. We have our first idea coming up. I will tell you about it very soon. We're gonna mainstream this stuff. We have to. Beautiful. Well, I'm excited to learn more.
One more slide. Are we good?
We're good.
Awesome. Good job out of you. We're going to take a quick 90-second break. Market's basically unchanged. Even the S&P's up 2, NASDAQ down 7, Russell down 23, and Dow down 15. Volatility in by 23 cents. And crypto, did you hear? Bitcoin trading 36,800 on the cash side. We'll be back in 90 seconds. Let's take you live.